What's going on, apes? My name is Tyler and welcome back to the channel. So we have a very important AMC update video, and this is absolutely wonderful news. As we do know, the stock market is likely to go through a downtrend, and what the Federal Reserve is forcing banks to do now is a clear sign that something is wrong in the economy, and they are expecting some level of market crash or correction coming in the next couple of months, if I were to imagine. So we're going to go over what happened today with this situation. We're also going to go over briefly the Ortex data. We're also going to talk about earnings because it is very important that you guys understand where we are at when it comes to earnings and what to expect, or at least what I expect. Keep in mind, these are only my expectations mixed in with facts, so come to your own conclusions, do your own research. I'm not a financial advisor, not a financial planner or your dad, so ultimately make your own decisions. But at the same time, if you want to see AMC stock go straight to the moon, make sure to drop that like on the video, as well as comment down below. Let me know what you think about earnings and this new rule change for the big banks. Also, at the same time, consider subscribing to the channel and turning on that notification bell. So getting right into the video, guys, just to acknowledge the move that we did see today, we went down 2.42%, which we typically see on Friday, but on a usual Friday, you're down anywhere from 5 to 7%. You see an all-out short attack happen, and you drop a lot in price, but that did not happen today. Only dropped 2.42%, and after hours bouncing up quite a lot right now, up 0.89%. So definitely good to see, and the fact that we are staying at pretty much $33 is a great thing. If we close under 30, that would have been a pretty negative thing going into earnings, but the fact that we did hit this low at $28.91, bounce right back up over our support levels, and we have maintained those support levels even on our typically most red day, which is Friday. Thursday tends to be pretty red as well, but that did simply not happen yesterday. So definitely looks good as far as technicals. I don't want to focus on that too much. Obviously, we have to break out past $40 and then past the 200-day moving average, but like I said, I don't want to focus on that too much during this video. But let's get into the Ortex data and then talk about this whole situation as well as earnings. So Ortex data is signifying to us, let me refresh this so we get the most up-to-date information, 16.3% short interest. The short interest is going up about 1% over the course of about 3 days. So definitely looking good, guys. We're in a fantastic situation. So like I said, 16.3% estimated short interest, 83.37 million shares that are sold short. The short interest change of positive 4.52%, return shares of 2.9 million, or 2.19 million, my bad, borrowed shares of 6.78 million. So that's a borrow change of 4.59 million. But we did not see the actual borrowed shares go up as much as the actual short interest shares, or I should say the borrowed shares went up more than the actual short interest shares did go up, because keep in mind, when it says return shares and borrowed shares, this is simply based off of the free flow on loan, which is at almost 20%. Obviously, like I said, the short interest is at 16.3%. So you can see return shares, and it doesn't necessarily mean that shorts covered. Yes, it can mean shorts covered, but in this case, they are not covering whatsoever. So definitely looking very bullish here. Share utilization is going up yet again to 92.39%. Possibility for forced recalls. Obviously, a hard stock to borrow. They don't really want to get into this habit of naked short selling, and a lot of other reasons, but I don't think that's the biggest thing to be concerned about as far as right now. I think it's a situation that happened with the banks, and obviously everybody's eyes is going to be on earnings coming Monday. So let's get straight into that, guys. What the Federal Reserve did today, and this is bombshell information that you guys have to be made aware about. So the Federal Reserve announces new capital ratios for large banks following stress test. So let's get into this, guys. It says, the U.S. Federal Reserve announced on Thursday how much each large bank that underwent the most recent stress test will have to hold on their books as capital cushions. The capital requirements for each of the 34 banks are based on how well each firm performed in the June test, and will take effect on October 1st. Goldman Sachs and Morgan Stanley were directed to hold the largest amount of capital to guard against losses, facing ratios of 13.4% and 13.2% respectively, which this is a very high amount, guys. That means they have a lot of exposure to options and derivatives, and they have a bigger potential than other banks. Obviously, they are the two biggest banks, but they have bigger risk allocations, and they have to keep more capital on the sidelines, because the average, right, for any bank, right, your bank down the street, if you're not using one of these big banks, they have to keep 4.5% of all of their assets under management in cash in the case of deferrals or a market crash or correction or just a depression overall. Anything can happen, right? But But it says the ratios are part of the new stress capital buffer regime established by the Fed, which allows the central bank to set custom capital requirements for each bank, depending on how severely each firm faces losses under the annual stress test, basically saying how much risk each bank does have. And like I said, Morgan Stanley and JP Morgan, or Goldman Sachs, excuse me, they are the two riskiest banks. They have the most to lose during a crash or correction. So it says the new capital requirement combines the 4.5 minimum capital ratio for all large banks with a custom stress capital buffer. HSBC's North American operation faced the largest such requirement, with the Fed ordering a 7.5% buffer. The nation's largest firm also faced a GSIB resurge of at least 1%, which scales up to 3.5% for JP Morgan Chase & Co., and nation's largest bank. So this is telling you right now, guys, that JP Morgan's ratio went up 3.5%, and this is valid or enforceable on October 1st. So you're going to see some form of liquidation coming. They're not just going to pull all of this cash out of their ass. So they're going to have to liquidate some position. So right there, that could mean that they would get out of some of their short positions or force the hedge funds and institutions who use these large banks to cover on their positions if they don't have enough cash to meet these requirements. Because ultimately, when the bank gets higher requirements from the Fed, it comes down to the hedge funds and institutions. That is very important to keep in mind. That is who they lend to. That is ultimately who has to give the bank more money. So you're definitely going to see a lot of big moves in AMC stock, but in the overall market coming October 1st, or shortly before that, or shortly after that. That is a 100% guarantee. These are large percentages. When you're talking about trillions of dollars under management, you're talking about hundreds of billions of dollars that will have to be placed into their reserves to meet these capital requirements. So this is definitely a huge thing for AMC stock. This is not really setting a timeline, but this can have a huge impact in what to expect. And I think this does validate a lot of people's thoughts and theories around we should see this short squeeze at least by the end of the year. So definitely what I am looking forward to, guys. October 1st, mark your calendars for that. But like I said, things do happen slowly. You're not going to see a huge liquidation on October 1st. You're either going to see that start a couple weeks before October, maybe the middle of September, or even a couple weeks after October. We all do know there is a bit of delay when you do have such large rule changes like this one. So that is what I expect. I would mark your calendars for October 1st, but really be watching for something to start happening with AMC stock or the overall market by probably the middle of September. And this just overall sends you a big red flag that, one, the banks and who they are lending to are severely over leveraged. Obviously, needing to put up more capital is a huge red flag right there, but that the overall economy may start to slow down or go through a crash or correction. Maybe it's the Delta, maybe, who knows what it is. We could all speculate at this point. It's going to take some time to play out. That is the biggest thing to keep in mind, but we're going to be coming to October, November, December here in just no time at all. Obviously, time does fly when you are an adult and you are having fun every day. So, and this is interesting as well. I do want to point this out to you guys. The S&P 500 actually hit a 52-week high today, and that is kind of strange, kind of abstract why they are doing this right now if the overall stock market and economy looks to be booming and doing very well. So definitely something interesting. I would keep that on your radar if I were you. But let's talk about earnings and what I expect. I know I've talked about this plenty of times, but this is what investors have on their radar. And I'm not talking about apes, right? A lot of apes don't care about earnings, even though you should, because the fundamental valuation, if bombshell information comes out, innovation, the company is on track and doing great things, diversifying revenue sources, becoming a more sustainable company, that will push the needle up even further, and hopefully pretty soon here, AMC could be worth $30 per share. Then your potential upside is a lot more than your potential downside. So that's why it's very important to keep in mind with earnings. But the biggest thing overall, like I said, investors are going to be watching for, and I'm talking about big money, is exactly what they say. Obviously, the numbers, the revenue, that does matter, but it really comes down to good guidance. What do they expect to happen in the next couple of months going ahead into the future? There's going to be a lot of questions that are asked, some of those by apes, especially around the dividend, what they plan to do with that situation, but also how they plan to grow the company. That is the biggest thing, and I do expect Adam Aaron and his team of executives to absolutely destroy on earnings. That could start a big move in my opinion. That is what I am looking to make a trade on coming Monday. I want to get that confirmation if we do see a rip in the morning. Since earnings isn't after hours on Monday, you could see a rip Monday or you could see a sell-off. Anything is really on the table when it comes to Monday. After hours is going to be the most important thing, and then coming Tuesday morning. So if you guys are looking to make a trade on this like I am, if you guys want to be notified when I am making a trade in real time, check out the buy and sell alerts link down below in the description, guys. It literally pays for itself. Very inexpensive. You'll be notified when I do make this large trade on AMC or any other stock, whether it's a day trade, swing trade, or long-term investment in stock, options, and crypto. You'll be notified every time a trade is made. But that is pretty much all for this video. That is what you guys need to know. This is huge information, guys. I hope you guys can really understand what this does mean. Obviously, you're going to see a lot of liquidations coming October 1st. These are huge capital requirements, and it's definitely going to have an influence on AMC stock. So drop that like on the video if you guys like the information that was provided to you, as well as comment down below. Like I said, what are you doing with your AMC position? How many shares do you own? What do you think about this new capital requirement for banks, as well as what do you think will happen on earnings? Also consider subscribing to the channel and turning on the notification bell. And if you guys want to join a broker that does not use payment for order flow, check out the link down below for public. Get up to $70 in your choice free stock in about 3 minutes time with no need to link a bank account or deposit a single dollar, guys. Definitely check those links out. But until the next time, I hope you guys enjoy the rest of your night. I will see you in the next video.